Does this sound to you, though, like this is a pretty big pair trade? Short position against Europe, long position against the United States?
Well, as a former fund manager myself, it's difficult for any of us from the outside to opine on the positions of a large, sophisticated investor like Ray Dalio. Is it a change in his thinking about the world? I don't know. I only know what you guys publish on this, frankly, and obviously we've all seen the short filings. It certainly might be. One of the rationales that I've heard around this is that all of the conditions are in place to start getting short, which is that essentially it's a counter-cyclical view. We have raising interest rates, we have growth hitting on all cylinders, and so perhaps that's the rationale, and that makes some sense to me.
Dean Curnutt, your view on the equity market in the United States about that weaker dollar, higher equity market. What's the view in Europe? Can you get an equity market in Europe that rallies significantly if the euro carries on appreciating the way it is?
So typically the correlation between euro stocks and euro is pretty negative. It's almost an imposed condition based on QE. You see the same in Japan. When the yen rallies, the Nikkei tends to go down pretty reliably. That being said, I think to a degree you can. You can see the currency strengthen as the equity market strengthens. Some of this is imposed by folks like Steve Mnuchin, who's become a little bit of a weak dollar cheerleader. Haven't seen someone say it so explicitly as he did a couple of weeks ago. Draghi certainly got his eye on it, right? So he's made the comment that I want to say it's a 10% appreciation of the euro is worth something like 30 or 40 basis points against them as a headwind to CPI. That's not progress that the ECB can afford to give up. So if you start to see the euro continue to rally, remember this is a current account surplus region. The U.S. has got a massive, massive current account deficit this year. So you have the fundamentals for the currency in the euro to continue to rise. Your equities can continue to rise in that phase, but you also have to remember Draghi's got his eye on this, and at some point we'll have to be reactive, whether it's through policy or at least through rhetoric.
Andres, Amaya, your view on this?
Yeah, I think there is a cross current, right? So a stronger euro is a negative for Europe, but the other side of the story is that they're in a cyclical up cycle, and that for earnings could overwhelm even a stronger euro. You got to remember that Europe had basically 2 recessions, not just one.
Yeah.
And EPS are nowhere near the high prior to 2006 versus here in the U.S. we surpassed it a while ago, right? So from that perspective, I think cyclically Europe looks appealing. Now the question around structurally, that's a different story, right? Productivity is not where it used to be, even in places like Germany. And that's, we could sit here and debate that. But from a cyclical standpoint, I think Europe does look appealing.